And usually, you used to be able to do it like, oh, we're closing next week. Do you guys have insurance? Oh, no, I'll call my agent. We'll get it written up. I think those days are probably gone. So we try to inform the public about this. And unless, if you're going to be in a real estate transaction or know someone who is, you need to let them know day one, hey, we're about to get in this house. You start working on getting that insurance.
My recommendation would be the second you open escrow, go apply to multiple carriers. Because if you apply to one and they're not able to do it, you could get to the end of your escrow period and not be able to close.
As if buying a home hasn't presented enough challenges in recent months. Interest rates and low inventory have squeezed the market. Now a new challenge has emerged as many of the biggest insurance carriers have stopped issuing new policies in California. Find out why and how it's affecting homeowners on this episode of the SLO County Real Estate Podcast with Hal Swayze. Here's your host, James Bueno.
Welcome, everybody, to beautiful San Luis Obispo, California, for another podcast episode of the SLO County Real Estate Podcast with Mr. Hal Swayze. Again, Hal is with us. Hello, sir. How are you?
I'm great, James. I love it because we hit 70 today, and it feels amazing.
Yeah, I keep saying beautiful because I'm looking out the window, and it's gorgeous outside. Right? There's not a cloud in the sky.
Is this cloudy, cold spring going to affect the real estate market?
I don't know. That could be a
man.
Speaking of beautiful.
We're spoiled.
Yeah, we are.
It's funny. We were talking in the last episode on the market report about the quality of life. I've heard nothing but complaints on the weather for the last 6 months. People are like, oh, my gosh.
It's raining.
It's raining.
Yeah, what is this water falling from the sky?
Yeah.
All right, so let me finish where we're going. Speaking of beautiful, how you doing, JT? You're here with us, too.
I'm awesome. The weather's been great. I've worn shorts every day.
You're beautiful and awesome. And then we have Mr. Pete with us. How are you, sir?
I'm doing great, James. Thanks.
I'm glad we're having fun right now because we're going to get into a serious conversation about some stuff, Hal. So let's get right to it. This is going to be a long one.
Wait a minute. So I think we're in San Luis Obispo.
We are.
On the central coast of California.
We are.
I think if John lived in Milwaukee, he'd still wear shorts in the winter.
Yeah.
I'm pretty sure you would. Would you?
Hey, I've never been to Milwaukee. I would love to go see the baseball stadium there. But I'd probably insult Milwaukeeans if I gave an answer.
Milwaukee.
Okay, gotcha.
Well, I think I sent the team that picture. I was in Chicago in December, and I was in shorts and a T-shirt.
Yeah.
And it was snowing around, so I brought California with me.
Okay.
I was freezing, but yeah.
A lot of
literally
diplomacy.
freezing. Yeah.
Way to be diplomatic, John. We're going to have a lot of diplomacy. Is that what they call it on this conversation?
You're going to have to watch it.
That's today's.
Yeah, be careful. Sean,
this is an exciting one.
When I wave my hand at you, JT, that means we got to take it back. Take it back.
Gun over there.
Take it back. Yeah, I'll bring the hook out and hook you out. All right, let's get rolling. Hal, what do we got today?
Well, there's lots of things that affect what we do here in real estate on the Central Coast, and one that's come up, and it's been happening, but now there's been a late announcement that may have an even larger impact, and that's, the ability to get homeowners/fire insurance for your home. So, when you buy a house, if you're getting a loan, you have to have fire insurance. Otherwise, the lender won't give you insurance. Right?
You have to have insurance, no matter loan or not, right? You have to have insurance.
Well, no,
you don't have to.
You could pay cash, and you don't have to insure your home. But
I guess
was that smart?
No, it's not.
I got this hugely valuable asset, and if it burns down, I just come out of pocket.
Just watch it burn.
So obviously, insurance makes complete sense.
Right.
So, and John's been involved in the industry, knows obviously more than we do, but from a little bit from a distance. One of the, I think they are probably the largest underwriter of homeowners insurance in California, has also pulled back on writing any new policies. So if that amounts to, say, 20 to 25%, that means that any other company that's left is going to, one, be busy, two, who knows what will happen to the cost of the things, and what's the level of coverage going to be, because there is something called the California Fair Plan. And that's for people that just, can't get their homes insured in certain places. And that's very, very expensive.
And just to be clear, from the start, it's just writing new policies. They're not completely stopping business.
Right. And I think, and John, I'm going to defer to John, but I mean, I have a policy on my house.
Right.
I don't think they could just say, hey, we're not renewing you. But maybe they could, because, they got to protect all the other policyholders that they insure. And if they're going broke on everybody, then there's not going to be any money to provide the coverage they need to pay the claims.
Gotcha.
And I probably butchered that. John, correct me.
Well, the largest insurer in the state last week announced, as Hal was saying, that they're no longer issuing fire insurance. That company has 20 to 25% of the market. Other companies have done the same thing already in the last couple of years. So when you look at the major carriers in the state, most of them have either restricted new writings completely, restricted new writings substantially, and some have even non-renewed existing clients.
So here's why we bring this up, because if you're purchasing a home, getting homeowners insurance is an important aspect. And usually, you used to be able to do it like, oh, we're closing next week. Do you guys have insurance? Oh, no, I'll call my agent. We'll get it written up. I think those days are probably gone. So we try to inform the public about this. And unless, if you're going to be in a real estate transaction or know someone who is, you need to let them know day one, hey, we're about to get in this house. You start working on getting that insurance. Whether they work for one company, they broker, when in dealing with an insurance person that helps you get your insurance, you need to get them started to source it out, and so you know what the costs are going to be, and you can have that in place.
What's the shortest escrow that you remember?
7 to 10 days, yeah.
A week ago, you could walk into the largest insurer in the state and get a homeowner's policy. We're going to close this afternoon. It's noon. I can get one done.
Right.
Today, with the carriers, I'm told that it may take 2, 3, 4 weeks in advance to apply for the coverage in order to get the company to agree to bind the coverage and take on the business.
Right.
So my recommendation would be the second you open escrow, go apply to multiple carriers, because if you apply to one and they're not able to do it, you could get to the end of your escrow period and not be able to close. This is going to impact buyers and sellers. The more we can get out ahead of it and advise, the less of a headache it could become.
Yeah.
But it's going to be a headache if you don't jump on it right away.
Right.
So, say I buy a house from you, JT. I'm buying your house.
Yes.
You have insurance company A. Insurance company A has made the statement they're not writing any new policies, even though they've insured your house for 25 years that I'm buying from you. I come in, I'm like, I'm buying JT's house. Insurance company A, will you take me on as a client? They would say no.
No.
Wow.
And that is because?
That was true before this recent announcement. We wouldn't just say, because you're buying my house and it's been insured with the X, Y, and Z insurance company, that they're going to take you as a client, because they have not underwritten you. Mm-hmm. They know the property, but they haven't underwritten you.
Did everything I was supposed to do. I qualified for the mortgage. I did everything I'm supposed to do. I mean,
you may have a loss ratio or a history of losses in your current residence that would preclude XYZ from wanting you as a client.
Your last 2 houses burnt to the ground.
Quit storing cigarettes and gasoline in the bedroom.
In the garage.
Yeah.
You're using insurance money to buy this house.
I didn't have anything like that. They just don't. As a Californian, they do not want to have anything to do with me.
Well, I don't understand. I don't understand what you just said there. So I don't know how to answer that.
Well, I'm saying that they're insuring your property. I come in and I don't pose any risks. Let's say I don't have a history of
yesterday. You're right. They probably would, but they would underwrite you first.
Right.
And if you're a good underwriting risk, you don't present any additional risk. Yeah, they probably would have written it.
But now my risk lies in the fact that I just happen to be a Californian?
No, what's happening is the XYZ company that we're talking about has said we're not taking on any new risk in this state.
And it's not because of you, it's because of the fire, think of all the fires we've had and all the claims that companies are losing. Mm-hmm. So their outlay is way more, right? And I'm not an insurance expert or whatever, but I understand this part. So now it's like, boy, unless we can charge this much, it just makes no sense for us to charge a couple $1,000 to insure a $1 million house. And if that thing burns down, they've just, think of all the houses that have burned down in the last couple of years. It's got to be a record. I don't know, right?
It's definitely a record.
Yeah. So that's the thing. I think the challenge is, and JT, correct me, is it's a regulated industry, so they're being told you can only charge this much for insuring people in California. It'd be like if you own a gas station, they say, you can only charge 60 cents a gallon for your gas. but you got to buy it for 90 cents. Mm-hmm. You're probably going to stop pumping gas.
Yes. Okay.
And that's the reality. How
I get it. It just
well.
from a I guess a smaller viewpoint, it seems as if that's a stupid business decision. You guys are losing money by not taking on new clients. But I guess if they can only charge so much.
Well, wait a second. I'm not going to pump you a gallon of gas because I'm going to lose 30 cents.
Yeah, I get that now.
I'll keep my 30 cents and not pump any gas.
And shut the station down. That's what's happened.
Yeah, or sell potato chips in the store.
So this has happened before in California.
Oh, that's interesting.
It's happened multiple times. Back in the 90s, after the Northridge quake, insurance companies were required to offer earthquake insurance. And about the only thing that could bring the major carriers to their knees in 30 seconds is an earthquake. If they have to offer every homeowner earthquake insurance. Well, companies don't want earthquake insurance. So what happened after a couple years of negotiations, the California Earthquake Authority was established, which took a lot of the risk away from the carriers. And so the homeowners insurance market opened up again. The largest company stopped taking new business. However, they would accommodate existing clients. Jay sells his house in Arroyo Grande, moves into San Luis Obispo. We'll write his house in San Luis Obispo. Jay is living in Arroyo Grande, decides to buy a house out at the lake as a second home because he's been with the same carrier for a long time. They would accommodate him and write that business.
But they're not doing that now.
But they're doing nothing now. It is absolutely no new business. So I've been a client of this biggest carrier for 40 years. I sell my house and move. I've got to find a different carrier for my new house.
Could the state of California come up with something like an earthquake authority to help with fire insurance?
Well, there is the fire insurance of last resort that exists right now called the California Fair Plan.
Which is so expensive. I have a good friend who actually couldn't get insurance, and now he's actually saying, "Jay, I'm getting the house ready for sale. I'm leaving the state of California." So there's property that but the buyer's going to have the same problem.
Buyer's going to have the same problem.
Yeah. So how's that going to affect his values? Right? If you're looking at paying $20,000 a year for fire insurance times 10 years that you plan on living there, that's $200,000. I'm going to be looking at the price of that property going, well, it's going to be $200,000 less than what you're asking because that's what I'm going to end up paying.
Yeah. It is interesting because we talk a lot about the reason there's so few homes for sale is because all these 6.9 million sales we had in 2022 and all the sales we had before, and then all the refinances that have a huge percentage of the population either owns their house free and clear or has like 3.5% or less, right? So I stay in my house at 3.5%. I go out in the market today at 6.5%, right? So that's a change, right? And then if I go up, not only am I borrowing more, so my interest rate's higher even at the same amount. If I move down, not so affected, right? Maybe I got a small loan, and if I just buy down, I don't have a new mortgage, so the move down buyer wins. But that's limiting our supply. People don't want to give up their homes because of that.
Sure.
So they're grandfathered in, we call it, at that rate. Now we have insurance, right? So my insurance is very reasonable in my house. I think it's like $2,000 a year for an 1,800 square foot house. Nothing, right?
It's not that much, I bet.
Okay. Well, yeah. Should I change carriers?
You
Not
can't.
now. Yeah. So my point being is, okay, now I'm going to sell this place, and if I go to that lender of last resort, I'm hearing quotes between $10,000 and $20,000 a year. Well, that's a big impact, right?
Massive, yeah.
That's $1,000 a month. That's like a huge increase in your rate. So the point being is, all these things will continue to kind of lead to maybe less homes for sale, or people leave here and go somewhere where each state has different rules, correct, in insurance. So every state's a little bit different, or they don't have a wildfire problem like we do, right?
Insurance is state regulated.
Yeah, state regulation.
And California is probably the most regulated state in the insurance industry.
Yeah.
Again, this is another reason where you have to consider how you feel about government regulations.
So at the end of the day, as it goes for real estate, we got to be on our toes, be proactive in getting insurance, and know it's going to be a little trickier.
Is there insurance brokers that can specialize in that that you maybe can refer people to if they have that? Because it sounds like this is normally, like in our two purchases, insurance was much after the fact.
You didn't think about it, just who do I get?
Yeah, okay.
Insure it. Yeah,
Go ahead,
there's
get
no
somebody.
thought involved.
Yeah. Now it seems like it's much, much more important to get out in front of it.
So, yeah, I'm not really in a position here where I'd quote some people, but we've gotten some people that we feel have some latitude to give people the most options. That's all we can do.
Yeah.
Right? Direct them to people, get there early, and just be prepared. Right?
Well, and remember, as we talk about the Fair Plan product in no way compares to a homeowner's package product that you would typically see from the State Farms, the Allstates, the Farmers, the Auto Clubs, the Safecos, the bigger carriers that are in the state. It is a fire-only product. It does not, to my recollection, doesn't include liability or personal property.
Yeah.
And it's very highly priced, as you guys stated.
Sounds like my medical insurance.
Yeah, right. And so those same carriers that I just mentioned, I don't know all the companies and their underwriting rules, but I have heard kind of through the industry that the big companies that are represented by what we call captured agents, where they only work with one organization, most of those have heavily changed underwriting rules that may be as restrictive as no new business to very little new business to even non-renewing existing business. And so if you go to a broker has the ability to go to multiple companies to shop to see if they can get you a product. I wouldn't be looking to find great pricing right now. I'd be looking to find a product.
Jeez. You sound like these headlines that you rail against.
Well,
but it's real.
This is the reality
yeah.
of where we are. Do you think insurance agents are happy?
No. It would stink if I worked for any one of these companies. There's like, okay, we're not doing any more new policies in California. Where's the incentive to stay in that line of business, really, to be honest with you? I mean, you could just get the renewals that come in on a regular basis, but if that person ever sells, you can't give them a new policy.
As I said, we've been through cycles like this before.
It will change. This is a reaction. It's been extreme circumstances, and then people start to see it.
You would hope that people who have who are stakeholders might want to be talking to the people who are decision makers. So if I'm the president of the California Association of Realtors, I probably ought to want to have a conversation with the state Department of Insurance Commissioner, right? I might want to try to influence some more pragmatic and practical thinking.
Well, and as you said, do you think insurance agents are happy? No.
You think real estate agents are happy?
No. How about consumers?
How about lenders?
Yeah. You make a good point, because if it's left up to the consumer, not everybody's buying a house, right? So if you have your policy, you feel pretty good about it, you're like, no, it doesn't really affect me. No, it's out of sight, out of mind. But for those new buyers, it does. So it will take a group effort to kind of bring hopefully some semblances, because obviously the costs are going to go up, and the consumer, is going to pay more for this kind of. I mean, we just took out 20 to 25% of the supply of insurance.
Wow. So
now you're going to have backlogs, delays, pricing situations. Again, I can't talk about. I don't know how the pricing works, but if you don't have enough supply, you know what happens to the price of stuff.
Yeah, right. It's going to go up. Fundamental, basic
I
economics.
think last week's market report was about that a little bit. Not enough inventory. Those prices are going to stay.
Yeah, they'll probably stay that way. Yeah.
If the Department of Insurance were to grant these carriers rate increases, my sense is we'd see some change. Now, depending on the amount of the rate increase would probably determine the amount of change to their underwriting rules. The one company that I have the most information about, I know their reserves have dropped by about 2/3 in this state the last 2 years. So the one thing you don't want to have happen is have a claim, and the insurance company goes, sorry, man,
Right.
don't have any money.
Who would have
Yeah.
thought insurance would
I know,
be the
right?
thing
Yeah,
that
yeah,
keeps
you never
somebody-
know.
Well,
Yeah.
think about a first-time home buyer, right? They've scraped together just enough money to put it for a down payment. They've scraped together just enough money for closing costs. Then they find out their fire insurance is going to put them out of the market and they can't buy.
Yeah, or buy a less expensive home.
Yeah.
Yeah.
They were already like in the entry level because they were a first-time home buyer,
Yeah.
and now they get pinched out because insurance is pushing them away from the ability.
What's
to be a
crazy
homeowner.
about it, what I don't understand, is the state takes the stance to, it's like, okay, yeah, everybody could build a shed in the backyard. And somebody could go ahead and live in that shed. But by the way, it's going to cost you so much to insure that shed that you can't afford that shed. That makes no sense to me.
Bingo.
You just made John's day.
Hey, Jay.
Yeah,
You know, I think everything that's worthwhile in life comes with obstacles.
it does.
Right?
Yeah,
I
if
mean,
it was easy, it wouldn't.
If it was easy, nobody'd do it, right?
Yeah.
When was the best time to buy real estate in California?
Oh, you know what?
Obispo.
Two best times are today and 20 years ago. But 20 years ago would have been the best time to buy.
Especially for insurance.
Yeah.
Because of insurance, does that mean it's not a good time to buy real estate today?
No, it's still a great time to buy.
That's the moral of the story
Yeah.
right there. Do not let this obstacle stop you from making a good business decision. Just make sure you know how to navigate this additional obstacle that wasn't there a week ago.
And you know what, John, to your point about the earthquake and the earthquake, whatever the was formed in the state of California, like insurance companies are like, okay, hey, we're not, we need to pull out now because of this earthquake thing. The state fixed it, and now they came back in. So if you can get into a house now, and the fire insurance is an issue, but it's going to push buyers away that can't get into it, and you can, and the state corrects this problem by some policy change, and insurance companies can come back in, then you can get, just like buying, at a high interest rate, you can always refinance, get into, a home that you can get into today. Maybe somebody else can't get it because of this interest, because of the fire insurance. And then when the policies change or it becomes more attractive for the insurance companies, they come back. Now you got a better rate. You just end up as a win on top of a win.
Who wouldn't have liked to buy a house in 1979 or 80? You're talking about 20 years.
Yeah.
But rates were 16, 17, 18%,
Yeah.
somewhere in that range,
you,
right?
You would have been today.
Yeah.
You'd think that's crazy, but wait, the purchase price was $10,000.
Exactly. So over
19
time, it works its way out, right? So
1978, 48.6, baby.
yeah,
It's my first house.
I wasn't alive yet, but it's fine.
yeah.
You weren't alive yet. Jeez.
That's a down payment on a car today.
Yeah, maybe.
Maybe.
Yeah.
Yeah.
All right, Hal, I like to do this every once in a while. So if anybody has any questions on any of this stuff, I know you're not an insurance expert, but JT is. We can find out information if anybody needs it. How do people get a hold of you to ask you some questions about real estate?
Sure. Yeah, and we do know who to send people to, so certainly call us for that. So yeah, the office line is 805-781-3750. Probably the best number to call. Yeah, and we'll get you taken care of.
You have an email too, right?
Yeah, it's H Swayze
Or Hal.
Hal at Team Swayze. That's easier to spell.
Yeah, Hal.
Why do you always ask him when he looks at you?
'Cause I don't ever call or email myself.
He doesn't
I do,
email himself, yeah.
Yeah.
Yeah, exactly. You forget your own phone number.
Plus, there's a web page.
Hal's a little Hollywood now. He has all the little people do that stuff for him. So
Come on.
I'm joking.
Yes.
All right, guys, thank you so much. I'm glad we were able to give out this awesome information. JT, you kept it on. I saw you getting a little red there for a few seconds, but great job. I know there's a lot more you wanted to give, JT.
that passion comes through on the podcast.
Yeah.
I gotta
You
say.
held back nicely. Good job.
I'll let Jeff edit this.
Oh no.
He just needs to say it to get it off of his,
I
off of his
opened
chest.
the
I get
can.
it. I get it.
I
You
opened
know
the
who's
can.
responsible for this crisis?
We're editing this.
We all are. Because we voted in the people who are making these decisions.
I'll edit some of that.
He just had to put it on the mic.
You had me at We All Are.
Yeah. All right, gentlemen. Thank you very much. We'll see you all next week. Thank you, everybody, for listening to us.
Yes. The soapbox is.
Thank you for listening to the House Swayze podcast. Be sure to subscribe and rate this podcast. It comes out every Monday, so check for it in your feed for the latest information on the San Luis Obispo County market. The Slow County Real Estate with House Swayze podcast is available wherever you get your podcast and on houseswayze.com, where you can find current listings and other real estate tips. Houseswayze.com, that's HALSWEASEY.com. I am James Bueno, Director of Marketing for the House Swayze Group. If you're looking for anything real estate, give us a call, 805-781-3750.
House Swayze is a licensed California real estate broker. DRE number 01111-911. The Slow County Real Estate with House Swayze podcast is a production of AGM Podcasts. Subscribe wherever you get your podcasts.